supporters. And ladies and gentlemen, we've had her on stage for those who were here for the Savo breakout session. Let's put our hands together for Clarice Bugo Kionge, Kenya Country Director for Heifer International. She is going to be giving a keynote presentation and remarks on transforming the future of Africa's agriculture by supporting youth-led agribusiness and embracing technology and innovation. Karibu.
Thank you so much, Mark. To the Prime Minister, Cabinet Secretary, Honorable Musalia Mudavadi, the PS for Ministry of Agriculture, Livestock, Honorable Jonathan Mweke, distinguished guests, ladies and gentlemen, young innovators and champions of agriculture transformation, good morning. We've just had a session here that was looking at youth in agriculture. I know that this FINAS 2025 conference has been looking at financing sustainable agricultural food systems, but this particular session that has just ended here was looking at transforming the future of agriculture, of Africa's agriculture, by supporting youth-led agribusiness and embracing technology and innovation. And I just want to bring it to a conclusion, even as the government officials and our dear Prime Cabinet Secretary and his team are here. My name is Clarice Kionge. I'm the Country Director for Heifer International Kenya. The discussion we have just had in this room was touching on youth in agriculture and was very insightful. We had various panelists that consisted of the bank, ABSA Bank, as well as the Agricultural Finance Corporation, consisted of development organizations like AGRA, Practical Action, and Heifer International. There were many youth and many other development partners that were in the room. And I want to thank those panelists for laying bare the achievements, the challenges, and the opportunities for youth in agribusiness and agri-tech that gives us reason to rethink sustainable financing with youth lens. It was very disheartening as we did a poll here, and youth, even after we have said everything else, were only 7% believed that the development organizations and everybody here are really thinking about them. It was very disheartening, and I'm hoping that this discussion will take us to another level of walking the talk. Ladies and gentlemen, today, Africa food systems stand at a critical point, with our population projected to reach 2.5 billion by 2050, and climate change intensifying agricultural challenges. Business as usual is simply not an option. We need a bold innovation. Within this challenge lies striking opportunity, a fertile ground for true transformation through the vibrant youth population that we have. Our smallholder farmers, the backbone of our food security, producing 80% of the food consumed across Africa, deserve transformational solutions that unlock their full potential and secure prosperity. Increasingly, their solutions emerge from the most dynamic and often underestimated force of our continent, and that is our youth. As Heifer International, we have witnessed firsthand the young innovators to reimagine agriculture. Right here in Kenya, we have supported thousands of youth, young people who are actively creating the future. We see young developing mobile platforms. connecting farmers to market, creating precision agricultural tools using AI, and designing climate-smart solutions that build resilience from the ground up. These are not distant dreams. These are scalable, profitable, and profoundly impact-driven innovations already transforming lives. The young innovators in this room today embody hope, determination, and audacity to solve problems that have persisted for generations using fresh perspective and digital fluency. I just want to share with us that in 2021, HEFA undertook a study that was looking at the role of youth in agribusiness across 11 countries that we work in Africa. This study interviewed 300,000 youth across the continent, 30,000, and also interviewed several farmers and farmer organizations. And this was in Ethiopia, Ghana, Kenya, Malawi, Nigeria, Rwanda, Senegal, Tanzania, Uganda, Zambia, and Zimbabwe. And things that was a key highlight of this study is that the need for new investments to stimulate access to innovations. The African youth who are currently turning away from agriculture to consider opportunities in the sector, especially given the urgent need to generate jobs and repair food systems battered by the pandemic. The study identified key challenges faced by smallholder farmers, farming communities, and potential areas for innovation and growth. And these were the key ones. The first one was that access to financial capital was almost a mirage for the youth. Capacity building and land will, if those who are there, they will significantly spur youth interest in agriculture. Smallholder farmers will embrace advanced technology if the tools are affordable. Somebody just said, I think Professor just said here in that discussion that we are no longer thinking, because the youth are only thinking about the hoe that was used at home, and how best can we change those tools so that the youth can be able to be involved, but also that our smallholding farming can go a notch higher using other technologies. Agricultural innovations have a strong pulling power for every stakeholder in the sector. They can create opportunities for young people who might otherwise ignore agriculture while sustainably increasing productivity for smallholder farmers. Agri-tech is an untapped opportunity, as we saw it. Untapped opportunity in the sense that technology is taking us far. And if you are a Kenyan, you don't need to be told what the youth are doing with technology. Yet, putting it into agriculture is untapped. And youth participation in agriculture is therefore critical in transforming Africa's agriculture. The young energy, and indeed they have the energy. Creativity, and indeed they are creative. Youthfulness are indispensable. HEFA is in the forefront of building the agri-tech ecosystem in Africa, leveraging the power of innovation and technology for Africa's long-term agricultural development. Stemming from these insights, HEFA International, therefore, created a Youth Challenge Fund, a challenge that then would support agribusiness innovation, initiatives designed to catalyze ground-up innovations that address some of these challenges the smallholders are facing. It provides the incubation and catalytic interested in building. Yes, building innovations and building technology. And anytime our work on production, our work in markets would talk about product development, market
Ladies and gentlemen, I just want us to realize that even as much as agriculture is employing,
only 1% of global venture invests in agri-tech. And that is a concern. It is not just unfair, it is economically rational and a profound continent. The solutions by our innovators and the potential identified by our panelists today showed that this can be achieved. Innovations like this we champion through Ayute have the potential to generate economic value. They can lift millions out of poverty, create countless jobs, and ensure food security for a continent poised for growth. We must challenge this narrative. We must show that investing in youth-led agri-tech is not charity. It is a smart business. It is the most direct pathway to food security, to climate resilience, and inclusive economic growth for our continent. I challenge us all, therefore, that as we think beyond our usual ways, we may think about this. And I want to challenge the government leaders. How can you truly reform policies and create regulatory sandboxes, leveraging proven models like Ayute, Value for Her from Agra, and many more, like the ones talked about by Practical Action and others, to ensure integrated policies that combine financing, mentorship, and tech development. Somebody here, when we were just concluding, asked, why are youth not paying the loans? And that resonates to us. If any one of you cared to listen to the report on our Hustler Fund for the Kenyans, that a lot of has not been paid. Somebody asked here, why are youth not paying? The reason is many of our policies are not integrated, and we want to challenge us. Can we integrate? It is not just finance. The youth need capacity building. The youth need hand-holding. The youth need a daring organization that would work with them to test their innovations and make them move forward. So that is my challenge to us, to the private sector. How can your resources and expertise and market access directly accelerate youth-led innovations through robust mentorship programs that draws from insights on product development and innovation? And I'm still challenging the private sector. Who will dare to give the youth those opportunities to test their innovations with their in their companies through what you're doing, so that they can see whether it works, because that's what the youth need. To the development partners, how can your programs better integrate digital solutions and genuinely empower youth participation? They've just told us here that they don't want to be beneficiaries. They want to be partners and co-creators in the table where we are discussing development and where their voice can be heard. To the financial institutions, I think they've brought it here. We have said that the youth innovations lack collateral. They lack data that the financial institutions need. How can I have data when I'm just developing a product and I have not tested it? I do not have credit reference because I've not taken loan. So how can your financing model take into consideration the challenges that the youth are facing, developing other innovative de-risking mechanisms that can enable youth to be bankable? And they've said it here. And to our young innovators and youth, continue to dream boldly, build relentlessly, and never underestimate your power to transform not just agriculture, but the very fabric of our society. You are the disruption this Africa society needs. Ladies and gentlemen, the youth session today reflected a deep belief in collaboration and co-creation. Through next-gen talks, we amplify youth voices. Through interactive roundtables, we break those silos. The focused engagements ensure every stakeholder play a role in co-creating solutions grounded in reality of our smallholder farmers and aspiring young entrepreneurs. As we conclude the session and I usher in the next session, I leave you with these thoughts. The young innovator we have engaged with today, and countless others like them, are architects of Africa's agricultural future. Their success is our collective success, and their challenges are our responsibilities. And I know we know what that means. The question is not whether we can afford to invest in youth-led agri-tech innovation. The question is whether we can afford not to. The cost of inaction far outweighs the investment that is required. Let us carry the energy from Finance 2025 forward. Let us build the bridges, forge strong partnerships, commit to actions that will accelerate the profound transformation of our food systems urgently needed. May this be remembered as the moment we truly embrace the disruptive, empowering potential of next-gen solutions for sustainable, prosperous Africa. Long live the youth in agribusiness. Thank you.
Thank you so much, Clarice Kionge from HAFA International, the country director. A message there to reflect as we look at financing agri-food systems sustainably. Now, as we move forward to the guest of honor, I'd like to call on, it will be up to you to decide whether he's youthful. The Principal Secretary for the State Department for Livestock Development, Bwana Jonathan Mweke. Now, on day one, opening ceremony, your Cabinet Secretary, his first few words were that he is a smallholder farmer, small-scale farmer. So it's not a declaration of wealth, but he set the standard for you to also declare whether you are a small-scale farmer or otherwise. So over to you, sir, and you'll call on our Prime Cabinet Secretary.
Thank you very much, Mark. The Prime Cabinet Secretary and Cabinet Secretary for Foreign Affairs and Diaspora Affairs, His Excellency Dr. Musalia Mudavadi, conference delegates, speakers and exhibitors, all participants, ladies and gentlemen, good morning. It gives me great pleasure to join you all during this Financing Agri-Food System Sustainability 2025 conference, FINAS 2025. FINAS 2025 aspired to present the progress made by respective institutions since FINAS 2024, expand upon the ongoing dialogue and introduce new focal areas such as funding for women and youth, resilience, infrastructure, biosecurity, and the digital economy. This three-day summit, organized by the Ministry of Agriculture and Livestock Development, in collaboration with Rotuba and other key partners in agri-food systems financing, brought together a number of agri-food system actors with a focus of finding solutions for smallholder producers in the country and Africa at large. Despite the sector's unmatched potential, our smallholder farmers in Africa, who form over 70% of food producers, remain trapped in a cycle of low productivity because they lack access to essential resources and support systems needed to improve their yields and incomes. Access to finance is often the first barrier. They cannot afford to buy quality inputs or invest in modern farming techniques. I'm pleased, though, to note that the last FINAS has transited from a national platform to a continental platform, a testament to the growing recognition that food systems financing is both a local and Pan-African challenge. It was great to have speakers at the African Union and East African Community level give insights on their regional experiences. This year's theme, Taking Ownership, Rethinking Sustainable Financing for Africa's Food Systems, has challenged us to move from dialogue to accountability. FINAS 2025 comes at a time when the Ministry of Agriculture and Livestock Development is actively implementing a range of programs designed to promote inclusive, resilient, and commercially viable agri-food systems. These programs underscore a central point. Access to finance is not a standalone issue. Addressing the financing challenges faced by farmers requires a holistic approach that accounts for the interconnected factors. As a ministry, we recognize that access to finance is often hindered by perceived risks in the agricultural sector. Whether the risk is of climate change, volatile market prices, or poor infrastructure, these challenges create barriers for farmers in accessing affordable financial resources. To truly scale agricultural financing in Africa, we must go beyond isolated interventions and embrace a Pan-African approach. This includes removing trade barriers that restrict a free flow of agricultural goods across borders. Many African farmers and agribusinesses face high tariffs, cumbersome regulations, and logistical bottlenecks that discourage cross-border trade and limit market access. We must leverage the Africa Continental Free Trade Agreement, which presents a unique opportunity to create a single, liberalized market for agricultural goods, encourage investment, and stimulate innovation in value chains across the continent. Our ministry continues to actively engage with regional economic blocs such as COMESA, the East African Community, and the Intergovernmental Authority on Development, IGAD, to deepen regional cooperation in agriculture. Through these platforms, we are working to develop integrated regional value chains that link producers, processors, and markets across borders, thus creating economies of scale, improving competitiveness, and expanding market access for our farmers and agribusinesses. Finally, I wish to emphasize the critical role of cooperatives in catalyzing inclusive and sustainable agricultural financing. Cooperatives are more than just farmer groups. They are vehicles of trust, shared responsibility, and economic empowerment. By pooling resources, aggregating produce, and offering collective bargaining power, cooperatives de-risk lending and create a more bankable profile for smallholder farmers. A compelling example is the Githunguri Dairy and Community Sacco Limited in Kiambu County. This cooperative has not only enabled thousands of small-scale dairy farmers to access a stable market and better prices for their milk, but it has also facilitated access to credit, veterinary services, and input financing. Through social, collateral, and mutual accountability, many of these SACCOs have achieved repayment rates that rival or exceed those of commercial lenders. Ladies and gentlemen, these deliberations have served as a call to every stakeholder: governments, financial institutions, society, agripreneurs, and development partners to reflect deeply and act boldly. We have to document the concrete steps we will each take to unlock sustainable financing for Africa's food systems. We know what is required is decisive, coordinated action driven by shared purpose. At the Ministry of Agriculture and Livestock Development, we remain unwavering in our commitment to this journey. We will continue to build partnerships, champion innovation, and mobilize investment, not in isolation, but through genuine collaboration. I now request that you join me in welcoming our chief guest, the Honorable His Excellency Dr. Musalia Mudavadi, Prime Cabinet Secretary and Cabinet Secretary for Foreign and Diaspora Affairs, to give his address. Karibu sana, PCS. Thank you very much.
Thank you. Please be seated. Good morning, everybody. First of all, let me acknowledge PS Mweke, standing in for the Ministry of Agriculture, my friend Professor Micheka, all the good people I've met here, our partners in this course, distinguished ladies and gentlemen, including all the participants from our regional bodies that are here. Let me acknowledge you holistically so that I can minimize on a very elaborate salutation that was given to me. It is my honor to join you during the FINAS 2025 dialogue, an important convening at a critical time. The global and continental food financing architecture is transforming, and Africa must keep pace and lead. I commend the Finance Secretariat and its partners for mobilizing such a diverse coalition of thinkers, doers, and decision makers committed to charting a bold new path for agricultural financing across the continent. Africa is home to 60% of the world's uncultivated arable land that, if properly harnessed, will not only feed the continent, but also contribute significantly to global food security. It also boasts a vibrant and growing youth population, representing a powerful engine for innovation and labor. Our continent is endowed with rich biodiversity, from drought-tolerant indigenous crops to resilient livestock breeds that are uniquely adapted to local environments. Moreover, Africa is a custodian of deep indigenous knowledge systems, seed selection, soil conservation, water harvesting, and agroecology refined over centuries by our farmers and pastoralists. Despite these formidable assets, the promise of African agriculture remains largely untapped. A key reason is that our financing systems are still not fully aligned with this potential. Too often, capital flows bypass smallholder farmers, overlook women producers, or are structured in ways that fail to reflect the seasonality, risk profile, and diversity of the agricultural sector. Financing remains fragmented, overly concentrated in a few high-value chains, leading out to the backbone of our food systems. What we need now is not merely more financing, but smarter, more inclusive, and context-sensitive financing. We must rethink not just the quantity of resources, but their structure, purpose, and accessibility. Are we financing to empower or to extract? Are we building systems that include pastoralists in Marsabit, women fish traders along Lake Victoria, and youth-led agri-tech startups in Kigali? Are our financial instruments designed to absorb risk, build resilience, and create value, particularly for those at the margins? This is the shift we are called to make, from transactional to transformational financing, one that does not just react to crisis, but anticipates opportunity. Financing that unlocks land, labor, and local knowledge, not in silos, but as part of a coherent strategy for sustainable, inclusive agricultural transformation. Kenya's agricultural sector, like much of Africa's, is fundamentally built on the backbone of smallholder producers. These small-scale farmers who cultivate plots, often less than 2 hectares, are responsible for over 75% of the country's agricultural output and the majority of our domestic food supply. Yet, despite their essential role, they operate within highly fragmented and underdeveloped value chains. Most of these farmers are disconnected from organized markets, rely on informal seed and input systems, and face barriers in accessing information, technology, and extension services. The cost of agricultural inputs, such as certified seed, fertilizer, and mechanized services, remains prohibitively Many farmers in counties like Uasin Gishu, Nandi, Trans Nzoia, or Bungoma spend up to 40% of their income on inputs, without a guarantee of fair prices at harvest. Access to credit is even more challenging. Only a small fraction of smallholders in Kenya have access to formal agricultural financing, with the majority relying on informal lenders or self-financing through savings, which limits their ability to scale or improve productivity. These challenges are further compounded by the growing threat of climate change. Farmers now face unpredictable rainfall, prolonged droughts, and frequent pest outbreaks, such as the fall armyworm, which have significantly affected staple crop yields. In arid and semi-arid areas like Turkana and Garissa, pastoralists with degraded lands and diminishing water resources, threatening both livelihoods and food security. Moreover, Kenya's perishable produce is lost after harvest due to lack of cold storage, inefficient transport, and poor market linkages. This not only leads to economic losses for farmers, but also undermines national food security and nutritional goals. Farmers in horticultural zones such as Meru or Kirinyaga often produce high-quality fruits and vegetables, yet much of this produce fails to reach urban markets in Nairobi or Mombasa in time, or meets rejection due to poor handling or lack of market access, particularly for rural producers, remains volatile and uncertain. Prices fluctuate widely, and producers often have little bargaining power or knowledge of market trends. Aggregation centers, contract farming arrangements, and digital platforms are still limited in reach and reliability. While there are promising examples, such as digital platforms linking dairy farmers to processors in Nyandarua, or avocado exporters working with cooperatives in Murang'a, these remain isolated successes and not the norm. Unless we address these systemic bottlenecks, smallholder producers will remain trapped in low productivity cycles, unable to contribute meaningfully to Kenya's ambition of a resilient, food secure, and export-oriented agricultural economy. But there is hope and action. Consider the case of farmers in Laikipia County, where climate-resilient fodder production, supported by county-level guarantee funds, has transformed local dairy cooperatives. Farmers not only boost milk yields, but also accessed stable income, allowing them to chillers and expand access to rural milk markets. Or in Busia, where trade financing, designed with fintech innovators, has enabled bean producers to tap into regional markets through structured forward contracts, mitigating price shocks and improving cash flow. Such models reveal that when financing is designed with local context in mind, outcomes improve dramatically. Kenya is proud to be among the first African nations embedded in agri-food financing priorities within its national development agenda. Under the Better Transformation Agenda, we are not simply treating agriculture as a sector, but as a platform for shared prosperity. We are de-risking rural finance through credit guarantee schemes, scaling e-voucher systems to reach remote farmers, and co-investing in value addition hubs across maize, dairy, horticulture, and fisheries. Importantly, we are creating tailored financing instruments for women-led cooperatives and youth-driven agri-enterprises. However, national action must be reinforced by regional and continental collaboration. Africa cannot scale agri-financing in silos. The African Continental Free Trade Area is a strategic lever we must activate more deliberately. It provides a framework to harmonize standards, facilitate cross-border agricultural corridors. Imagine a future where a farmer in Siaya can access input loans from a Uganda backed by a regional risk-sharing facility, or where a Rwandan processor sources raw material from Kenya through an end-to-end digital exchange supported by interoperable payment systems and real-time logistics networks. This future infrastructure investment and smart regulatory harmonization. we must also be clear-eyed about the need for innovative financing instruments that go beyond traditional lending. Blended finance, where philanthropic or public funds de-risk private investment, is gaining traction, and rightly so. But we must also explore green bonds for climate-smart agriculture, diaspora bonds for rural infrastructure, Islamic finance for faith-aligned investments, and blockchain-enabled traceability to improve creditworthiness. In Kenya, we are exploring a national agri-investment platform, bringing together public agencies, banks, cooperatives, and agripreneurs into a shared ecosystem of data, services, and capital. This platform will serve as a one-stop shop for financing needs linking farmers not just to credit, but also to insurance, savings, and investment opportunities powered by technology and anchored in policy. It needs coordination, courage, and capital. Coordination among ministries, development partners, and private sector actors to align resources with national and regional priorities. To test and scale an orthodox, prioritize people over paperwork, capital that is patient, inclusive, and committed to long-term transformation rather than short-term returns. Deliberate. I urge conventions, elevate local voices, and focus not on what is convenient, but on what is catalytic. Financing Africa's food system is not a matter of charity. It is an investment in resilience, security, and the future of a continent poised for greatness. Kenya stands ready to work with all of you to unlock this future. Let us take ownership. Let us rethink financing, not just to feed the continent, but to fuel its transformation. And above all, let us listen to the women holding communities together, to the youth, to the farmers who rise each morning to feed this nation. They are not just the beneficiaries of our food system, they are its heartbeat. Let us finance Africa's food future. Ladies and gentlemen, it gives me a great honor to be part of this summit as it comes to an end this afternoon. I believe that the output will be very tangible, and as a government, we shall remain true to all our commitments. Asante sana, and God bless you.
Asante sana to our Prime Cabinet Secretary. I'll just ask that you stay with us on stage just for a moment. We can remove the podium. We need to take a picture. We can remove the podium as we take a picture. And just to rehearse the picture, I'll be calling on a few people. No, it's not every day that you're next to the Prime Cabinet Secretary. So let me update my gallery and take a picture with the Prime Cabinet Secretary. And to the person who's taken the photo, this is your opportunity now, and all the people behind the camera. It's nice to see you again. Last time we were together was in February. It's good to see you. I'll also call on Principal Secretary Bwana Jonathan Mweke to join in this picture. And now to also call on the others. Umechukua vizuri, I have to update my LinkedIn. Asante sana. All right, let me also call on Professor Hamadi, Vice President Agra, Professor Micheka, Chair Finance, George Kubai, MD AFC, Petra Jacobi, GIZ, and Ravi Kiran, Senior Advisor, Agriculture and Rural Development Finance, Dr. Charity Mutegi, who has been the backbone of this. Let's put our hands together as well for her as she comes up on stage. The Finance Summit Director, and Rebecca Amhoye, CEO, Micro Enterprise Support Program Trust, to join us in this picture as we take this picture. Kuna moja ndio anaungana nasi, karibu. And then